Greetings, Great Wealth learners. My name is Mr. Simbi, and welcome to today's accounting lesson. In today's lesson, it is being brought to you by the Gauteng Department of Education in collaboration with Sci-Bono Discovery Center, and it is being broadcasted here at the Pakama Research Center. Once again, dear learners, welcome to our accounting lesson. So I'm going to be focusing again today on budgeting. So I want us to continue and see what today's lesson has in store for us. I want you to have your pen, pencil, have somewhere to write, as well as find somewhere comfortable where you can sit, and I want us to engage with the lesson. In the sections that we've covered previously, as I said earlier on, today is not the very first time I'm introducing budgets. Budgets were introduced in the previous two sessions. So in today's lesson, I'm just continuing with already what has been done. So the debtors collection schedule has already been covered. It has already been done. However, today I'm going to address it as well. The analysis and the interpretation of the cash budgets have also been done, but I will also be doing it in today's session nonetheless. And then I'll also be analyzing and interpreting what we call the projected income statement. In today's lesson, I will also be doing the analysis and interpretation of the cash budget as well, and all other budget information. I will be focusing on problem solving in today's lesson, but these are some of the sections that were covered in the previous sessions. Now, I want you to get my objectives today because it will tell you exactly what I want to achieve together with you. Remember, I'm not doing it alone, but I am working together with you. So what we want to cover today, number one, we want to calculate amounts that are missing from a cash budget. I think you've seen in past exam papers that there can be missing amounts. We want to see how can we get those missing amounts. We'll also be looking at some missing amounts that also come in the projected income statement. In today's class, I'll also be analyzing and interpreting the cash budget as well as the projected income statement. Now, without further ado, I want us to do activity number one, all right? So I want us to jump straight into the first activity. And as I've said earlier on, I want you to have your pen, your calculator, have somewhere to write, because remember, we want to interact with this video. I want you to be able to see exactly what I am doing, and then you follow suit. Okay? If you're ready, let us start with our activity number one. My activity number one is coming from the NSC November for the year 2020. You can see there, this is the NSC November 2020. And my focus for today is going to be only on question number 3. So we want to get onto question number 3. We want to explain it clearly. I'm going to do it in a very slow way so that you can understand exactly what we are on about today. And then the question reads, Blossom Pty Ltd sells expensive ladies' dresses, and these are of high quality. They also repair the dresses for customers, but they aim to break even on this service. Customers are allowed to buy dresses for cash as well as credit, but they are required to pay cash for all repairs. The information relates to the budget period ending on the 31st of May, the year 2021. And then the first thing that we are required to do is to complete the debtors collection schedule for the month of March to May. All right. So let us see what information are we given. Here's the information. We are given our total sales and the cost of sales. Remember, we are completing the debtors collection schedule for the month of March to May. All right. And then here we are given our March, our April, as well as our May. And then we are given now sales. Here is our sales as well as our cost of sales. These are very important amounts. And then we're going to use them as we will be completing our debtors collection schedule. And then let's see if we're given more information. There it is. Goods are sold at a markup of 75% on cost. So the moment we are given the markup percentage, which is 75% on cost, it enables us now, therefore, to calculate our cost of sales. And then credit sales are expected to be 65% of total sales. That should tell us something already, that if my credit sales is 65%, you need to remember that total sales, you have what we call total sales. Our total sales is 100%. And in my total sales, I have, number one, cash. I also have credit. So they're telling me that credit sales are expected to be 65%. I'm just explaining this so that you can understand. Credit sales are 65%. Therefore, it means your cash sales will be 35%. Please just keep that in mind. All right. And then let's see if we are given more information again. Now, this is the collection pattern, the trend that we will be collecting from debtors. The first one is that we'll be collecting 40% in the month of sale. Very key, very key. The 40% will be collected in the month of sale. This is very, very important. All right. So if you sell in March, the 40%, you're collecting it in March, the month of sale. But then it goes on to say that there is a discount of 6%. I'm going to show you today how to calculate that. And then it goes on to say 50% is collected in the month following the month of sale. 50% will be in the month following the month of sale. And then 8% is collected 2 months after the month of sale. And then 2% will be uncollectible. In other words, this will be written off as your bad debts. All right, let's see. Here is the schedule that we were given. Here's the schedule that we were given. And what we want to calculate is the credit sales. We want to calculate the credit sales for the month of May. Here is our month of May here. We want to calculate the credit sales there. All right. So if you remember, we were given some information already. And then the information that we were given would allow us to calculate the credit sales for May. And then here it is, the total sales for May. You can see here my total sales for May is 770,000. That is my total sales for May. And then what did they tell me? They told me that goods are sold at a markup, and then credit sales are expected to be 65%. So now I can get my credit sales for the month of May here. What do? I take my total, the total sales for which month? Remember the month that we have in question. It is the month of May. What is the total sales in the month of May? We have indicated it here, 770,000. Here it is, 770,000. And then we want credit sales. What percentage is credit sales? They've told us here, credit sales are 65%. So I'm going to come here and I'm going to get my 65 over 100. Please punch that in the calculator, and then you will get 500,000 and 500. That's it. Okay, so it means I will then come now to my May credit sales. I'm going to have 500. This one was an easy thing. It was an easy question to answer. All right, there it is, properly done. There is my 770 as well as my 65%, which gives you 500. Okay, now I want us now to go on. It is very important that you get to understand the debtors collection schedule. Now, the next question now, we have to calculate for the month of March. In other words, when we sold goods in March, do we collect anything in May? All right, so let us go now to our collection pattern. our collection pattern will then tell us that 40% is collected in the month of sale. 40% will be collected in the month of sale. And then, so this is the first month, and then you will be told that 50% will be collected in the following month, then 8% will be collected 2 months after. That is very easy. In other words, if I sell in the month of May, I will collect something in the month of May. That's what I'm being told. So if I would make it very simple, we can quickly come up with a way of telling which percentage I'm going to collect. In other words, if they are telling me that I collect in the month of sale, that is the same month. That is the same month. If I sell in May, I'll collect in May. That's what they're telling me here. May. Are you following me? Therefore, that means I'm going to collect the 40% in May. But to make it very easy, let's try to put numbers. Let's see if I can come here. Then I'll call this one number 1. I'll call this number 2. I'll call that number 3. All right. So number 1, I'm going to collect the 40. Number 2, I'm going to collect the 50. Number 3, I'm going to collect the 8%. Let's repeat it again. Number 1, I'm collecting the 40. Number 2, I'm collecting the 50. Then number 3, I'm going to collect the 8%. So it therefore means if I come here, I can then say I'm going to have my numbers now in an ascending order. That is going to be 1, 2, 3. All right. So what does that tell me? All right. You can see here I had my 1, 2, 3. And then when I come here, I'm having my numbers in an ascending order. That is 1, 2, 3 going up there now. Then when I'm in March, what am I collecting in? What am I collecting? I'm collecting the 8%. Okay. The 3. Okay. 3 is 8%. So how do I do that? I'm going to take my credit sales, which is going to be I'm going to try and squeeze it here, which is 364,000. 364,000, and I get my 8%. 364, then I get my 8%. And it should give you an amount which is 29,120. How did I do that? I simply had to understand that if they say collected in the month of sale, that is the same month. So it's going to be May, then I have my 1, 2, 3 going up. Yet in the collection here, I had my 1, 2, 3 going down. Okay, so here I was only focusing on March. All right, let's go see what happens in the following month. Okay, here is my calculation properly done. I want us to go now to the following month. The following month, I'm going to collect now. That is, remember here, we did that one. So I'm going to collect now. So remember again, I have my 1, 2, 3. So let's have our collection again. Our collection is going to be 1, 2, 3. So it means in the month of April, that is 2, I'm going to be collecting 50%. That is the collection that I'm going to have. In other words, if I sell in April, I'll collect 50% in the following month of sale. That is going to be May. If I sell in April, I'll collect 40% in April, then 50% I'll collect in May. So how do I do that? I'm going to come here. I'm going to have my 409,500. Then I'm going to say multiplied by 50%. I'm going to multiply it by 50%. And then you're going to get your 204,750. So I'm going to come here. I'm going to put my 204,750 over there. 204,750. All right. So now we're left with the last one, which is the month of May. Let's quickly do that one. Remember my order, I told you it's going to be 1, 2, 3. Let's come here, and then it's going to be 1, 2, 3. All right. So here I'm collecting the number 1. What is there? It is the 500,000 and 500. So I'm going to come here. I have my 500, 500. And what am I collecting? I'm collecting the 40%. 40 over 100. But I'll also be getting 94% because I'm giving 6% discount. What that means is you are not getting the whole 100%, but you're allowing your debtors discount. So I'm also going to get 94% there. So I'm going to say multiply by 94 over 100. That should give you 188,188. All right. And then if you should see it, there it is. And then I would then come here and then I'm going to say here 188, 188. Then I can add up now my figures, which is my 1, 2, 3. I can add this together with that, and it will give me my 422,058. This will be the final amount. It is important, dear learners, that you get to understand the debtors collection schedule. The easiest way is what I was trying to show you, or you can do it the other way to understand when it was sold and when will it be collected. The other way is to simply understand that it is 40% being collected in the month of sale. Once it is in the month of sale, then you just find where May and May meet, then that will be a 1, 2, 3 going up. Okay. Let's quickly go on now to the next aspect. In my next aspect, okay, this is the clear solution already done. Now, I'm going to continue with my activity. And then it says, calculate the missing amounts indicated A to D. So we want to see what are the missing amounts that the examiner wanted us to calculate here. Okay, you ready? Let us go and see. The first one, they wanted us to calculate cash sales for the month of April. Cash sales for the month of April. What more information were we given? Okay, it says cash sales for the month of April. So we are given information which says sales in April is 630,000. But what more information is still to come? There it is. That credit sales are expected to be 65% of total sales. So remember what I told you earlier on, that total sales, your total sales is 100. Therefore, if credit is 65, therefore cash will be 35. All right. So what we want here is our cash sales, which is the 35. Okay. So what we want is 35. And what we are having is 100, which is the total, all right, in the month of April. So multiplied by 630,000. If you punch that in your calculator, dear learners, how much do you get? You are saying 35% of 630,000. How much do you get? Okay, someone is saying, Mr. Simbi, I get 220,500. 220,500. That is correct. All right. So there it is. You have your 630 multiplied by 35%, then you end up with your 220,500. As simple as that. All right. Let's quickly go and see the next calculation that we must do. So B. The B has to do with a loan received from Janet Bloom. I want you to pay careful attention on this adjustment because I've seen that examiners do love this adjustment. They bring it several times. They can bring it with a cash budget. They can bring it with a projected income statement. And today, I've specifically prepared more than one for you so that you can get deeper understanding. But I want you to get this one that I'm going to do now. All right, let's hear what it says. What is the information? Payments, interest on loan. So we are being told that we have interest on loan, which is in March 1,365, in April 2,625. That tells us that our interest has increased. Our interest has gone up. Now, the next thing then is, why is our interest increasing? It will simply be because we have received a loan. Hence, our interest has gone up. We had a lower amount of loan and we're paying 1,365. And we now have a new loan. We have a new loan which have increased now our interest. Hence, we end up paying 2,625. So that is the reason why there's a difference between March and April. We have received a new loan. Once we receive a new loan, it's going to increase our interest on the loan. You're getting that one? Okay. Now, we want to see now what more information we are given. There it goes. It says, Janet Bloom has provided a loan to the business at an interest rate of 9%. So, interest is not capitalized and 1/3 of the loan is repaid to her on the 31st of August. December rather, each year. Remember, the 31st of December has nothing to do with what we're doing here. We are busy with a cash budget. So don't let that one distract you. Ignore this one, all right? We're not attending to it at the moment. As the company was still experiencing cash flow problems owing to the coronavirus lockdown in 2020, Janet agreed to increase her loan to the business on 1 April. Okay, so on the 1st of April, we have a new loan amount. What do we have to do now? We want to calculate that new loan amount. All right, let's see how we can do that. There are several ways in which you could have done that, but I don't want to waste your time. I want to show you the quickest way, the fastest way. All right, I'm going to show you the fastest way to get this amount. How do we do that? We simply have to understand that we received a new loan. So I'm going to call it the new loan. We received a new loan amount. That new loan amount has led us to getting an increase in interest. All right? An increase in interest. Let's see how much was that increase in interest. We were paying 1,365. Now we're paying 2,625. So let's get the difference between those. That'll be 2,625 minus 1,365. How much is the increase in the interest that we are paying now? All right. If we can know the increase in the interest that we're paying, it will lead us to the loan. So the increase in the interest that we're paying, someone is telling me, Mr. Simbi, we're paying an increase of 1,260. That is the increase now in the interest. So if the increase is 1,260, we can now say, my new loan, we don't know how much it is at the moment, my new loan, okay, I'm going to just call it NL, that is my new loan, multiplied by the rate, remember, which is what? 9% multiplied by 1/12 cash budget. We're preparing it monthly. Don't forget this aspect. The 1/12, don't forget it. You can make a huge mistake once you don't pay careful attention. 1/12. This gives us now the 1,260. Okay, so my new loan, multiplied by 9%, multiplied by 1/12 will give me 1,260. I'm going to transfer it and bring it here now and try to show you how it would appear in simpler words. It would mean that if I'm solving that, I'm now saying 1,260, you multiply it by 12, you divide it by 0.09. And then you will get an amount. Someone is telling me, Mr. Simbi, I'm getting 168,000. Is that what you all are getting? 168,000. So that therefore becomes the new loan that we have received. The loan received. How much have we received? We received 168,000. The quickest way, as I've said, go back to the interest. Check the difference between the interest. The increase in interest means we have received a new loan. Use that one now. So we say our unknown, which is the new loan, multiplied by the interest rate, which is 9%, multiplied by that 1/12. It will give you the 1,260, which is the difference between the old interest and the new interest. Then you simply solve it, and then you get your 168,000. All right, let's see how it would appear. Okay, that one is simply showing my calculations as I'd done earlier on, and then there it is. All right, so you can say 1,260 divided by 9%, multiply by 12, it will still give you your 168,000. Okay, now let us quickly go on to the next aspect. C. Now we're calculating C. Salaries of sales assistants. Salaries of the sales assistants. Let's hear what information is there. The sales assistants all earn the same monthly salary. All right? So we have 22,400. Okay? And then they were promised a 5% increase with effect from the 1st of April. So in April, they're getting their increase. Okay? It's a good thing. Okay? Then the business employs 2 sales assistants in March. So in March here, there are 2 sales assistants in the month of March, and planned to employ an additional one on the 1st of April. So they are planning to employ a third one on the 1st of April. All right, let us now see how this will pan out. If we are paying in the month of March, we are paying 22,400. That is what we're paying, 22.4. But we're paying it for 2 employees. How much are we paying each employee? Okay, so each employee, please punch that in your calculator. You're saying 22,400 divided by the 2 employees that we're having. How much are you going to get? Thank you. 11,200 per employee. 11,200 per employee. All right. Now, it then says the sales assistants all earn the same monthly salary. Are you still with me? They all earn the same monthly salary. Now, the next thing that we're going to do is we have to understand that they're all getting the same monthly salary, but each one is getting 11,200. They then told us that there's an increase of 5%. I know there are several ways you could have gone around this particular question. All right, but I'm just going to show you the easier way. 11.2 per employee. Let's give them their increase. All right, they got an increase of 5%. So if I come here, then I say, remember, an amount before increase, an amount before an increase, it is 100%. In this case, they're getting a 5% increase. That means at the end of the day, they'll be getting 105%. You're following me? So what I want for these employees, I want to know what is their 105%. But at the moment, they're getting 100%. How much is that going to be? Please punch it in your calculator. You say 11.2 multiplied by 105 over 100. And then you get your 11,760. So each employee now is getting 11,760 with the effect from the 1st of April. All right. And then the new employee, the third guy, is coming in when? The 1st of April. So he's coming in when the increase is just kicking in. So he's also going to be getting 11,760. And then remember, how many employees do we have? We have 3 now. So you simply multiply that by 3. Then you get your 35,280 for the 3 employees. Okay? Yes. Now, let's see. This is how it would come out. You have your 22.4. This is another way you could have done it. And then you simply say I want now for the 3 employees, so you multiply by 3 over 2, then multiply by 1,05. It is the same as 105 over 100. It will give you the same figure, which is your 35 to 80. Okay, so here I've given you 2 options. Okay, option number 1 is the top one, whereby you get the individuals. Then here you are getting the total for all the 3 employees. Okay, let's quickly now go on to the next one. The next one, dear learners, is D, rent. Oh, they love the rent one. Okay, never make a mistake of ignoring these adjustments. It is very important that you know how to do these missing amounts in your cash budget. Rent expense, see information F. There is information F. It says the director secured premises in a local shopping mall from Propco with enough space to cater for expected number of customers. Rent now is being charged per square meter according to the floor area. The rent increased by 11% commencing on the 1st of April. So in March, rent is before increase. What did we say earlier on? Before increase, 100%. And then it is increasing by what? 11%. That means in April, we have added 11% to the 100. So in April, it's 111%. Very important. Very important. Whenever you are adding, remember to do that. Now, they then say we want to calculate the amount for March. What is March? Before the increase. I'm sure all of you are aware of the UK method. I know you might call it with a different name, but all it says is what you want over what you have multiplied by what you have is equal to what you want. What is it that we want in this case? We want 100%. We want 100. What do we have? We have 111. What do we also have? 39,960. 39,960. All right. And then how much is that going to give you? That is going to give you 36,000. 36,000. So the rent in March was 36,000 before the increase. How did we get it? Before any increase, it has to be 100%. That is what we were simply doing. That is what we did. We got the amount before the increase, the 100%. All right. And then the following information was given as well. And then this is what we wanted. Okay. This is what we wanted. There we go. That is what we wanted. The following information here, we're going to use it in the following question you're going to see. All right. Let's see the next one, what it says. Refer to information F and H. This one I want you to pay close attention. Close attention. Listen to this one. The owners of the property, Propco, informed the directors of Blossom of the increase in rent planned with effect from the 1st of April. Remember the one we just calculated, okay? In order to economize on the rent, so we want to cut on our cost. The directors asked the owners, all right, for a reduction in the area rented. Because remember, we are paying rent according to the floor space that we are occupying. The bigger the floor space we are occupying, the more rent we pay. The bigger the area we are using, the more amount we pay. The lesser the space we are paying, the lesser the amount we pay. So they are saying they've asked for a reduction in the area. Asking for a reduction in the area equals a reduction in the rent. And Propqual Limited agreed to this particular request. Now, the director secured, remember, we have already spoken about this. Now, I want you to keep in mind that we already have secured the premises and the floor space that we are occupying in March and in April is 120 square meters. 120 square meters. That is the floor area that we are occupying. Now, our rent expense is budgeted to be 39,960, and the actual one was 31,968. All right, what happened in this case? What happened is we had budgeted 39,960 due to the floor space that we were occupying. What does that mean? Let's see. If we are using the budgeted, let's go to the budgeted. We had budgeted 39,960. This is in accordance to the floor space that we are occupying. All right? And if you then check, if we are to check how much is it per square meter, you would say 39,960, divide that by the square meters that we're occupying, which is 120 square meters. 39,960, remember, this is my rands, and I'm occupying 120 square meters. That means, how much am I paying per square meter? I am now paying 333 per square meter. I'm paying 333 rands per square meter. I want you to follow this. Please keep following. I had budgeted to pay 39,960, which is for the 120 square meters. That then equates to 333 per square meter. All right. Now, if I look at my budgeted in my actual, I then see that my budgeted was 39,960, but my actual became 31,968. That means I have reduced now my rent, because I had budgeted 39,960 in my rent, but my actual became 31,968. That means my rent has decreased. By how much has that rent decreased by? 39,960 subtract 31,968. My rent has decreased by 7,000. Thank you. Someone is saying, Mr. Simbi, 7,992. 7,992. So if my rent has decreased by 7,992, 7,992, yet I am paying 333 per square meter. How many square meters are within that difference now? In other words, the difference of 7,992, how many square meters relate to that amount? That will tell me the square meters that I've cut down on. So I'll say 7,992 divided by 333. Someone is saying, Mr. Simbi, I'm getting 24. That gives you 24 square meters. So we have reduced our area that we're occupying by 24 square meters. Let's see that. Here it is now. The reduction in the rent, which is your 39,960, subtract the 31,968, the actual gives you 7,992. And then if you want to know how much are you paying per square meter, you take the total 39,960, then you divide it by 120 square meters, you get your 333 rands per square meter. And then eventually you then say your 7,992 divided by the 333, you get 24 square meters. That becomes the reduction in the floor space. We have reduced our floor space by 24 square meters. I know there are other ways that you could have done this, but I tried to give you the simplest way. Dear learners, I want us to quickly go now to the next activity. This one is going to be exciting. Okay, this one is exciting. I promise you. This one is the thing. Okay, NSC June 2021. Again, question number 3. If you guys are ready, I'm going to go. Are you ready? Let us go. It says, Insert the relevant amounts for each transaction below in the appropriate columns for the following cash budget and the projected income statement. Example, monthly telephone cost I expected to be 4,200. Let's see. So what I'm given here is a cash budget for July and a projected income statement for July. So it is simply to test my knowledge now. Do I know what goes to the cash budget? Do I also know what goes to the projected income statement? I must be able to differentiate between my cash budget as well as my projected income statement. So in this case, I want to be able to be given a transaction and record it either in the cash budget only or in the projected income statement only, or in both the accounts. Let's see the information that we're given. It reads, a 3-month advertising contract for 6,000, all right, will be paid on the 1st of July, the year 2021. 2,000 of this 6,000 relates to the next financial year. So we paid 6,000. The 2,000 is a prepaid expense. Yes? All right. Let's see where they want us to record it. So if I'm going to record it, where would I put the amount? A 3-month advertising contract will be paid. The key word is paid. Once I hear the word paid, cash budget. Paid, cash budget. I've already paid. Okay? It will be paid on the 1st of July rather. So if I'm going to pay it, I'm going to bring it now to my payments. Where? 6,000 here. 6,000. All right? And then I now need to come to my projected income statement. In my projected income statement, I want to know, do I record the 6,000 or the 2,000 or the difference? Remember, in the projected income statement, we have to relate with the expense that has been incurred in this particular period. All right? The expense that has been incurred in this particular period. The 2,000 relates to the next financial period. So it won't fall within this particular period we're in question. So I have to now say the 6,000, which will be paid, minus the prepaid amount. All right? Remember, already you can think income statement in your mind. Prepaid expenses. Prepaid expenses. You subtract your prepaid expense. And then what comes out of it? 4,000. That is what I'm going to bring here as my expense. Here, 4,000. I bring it there. Okay? Yes. I hope this makes sense because I'm going to go on to the next one. Okay, let's quickly check the next one, dear learners. Okay. Oh, yes. Here it is when it is neatly written. There it is. Beautifully done. Okay. Let's quickly go on to the next one. It says, on the 1st of July, the year 2021, 45,000 will be invested in a fixed deposit. So already we're talking about an investment here. All right? In a fixed deposit. At 8% interest per annum. At 8% interest per annum. Interest is not capitalized and is received at the end of each month. All right? Let's see what they're giving me. That is what they're giving me. So it means I have two things here. I have two things. Number one, I have an investment which I have made. I have an investment which I have made. All right. If I have an investment which I have made, how much is that investment? I'll come and say 45,000. So I'm going to bring it here under my payments. I'm going to have my 45,000 under my payments. All right. But then I'm getting interest of 8% per annum. So I'm going to come and take my 45,000. I'm going to get interest of 8%. The keyword is per annum. So here I need interest for what? Per month. 1/12. Please quickly punch that in the calculator. I'm waiting for the answer. Anyone, where is it? Thank you. Someone is saying we get 300. Correct. So I now get interest of 300. That interest is going to come now to my receipts. Here's my interest. But the 300 interest will also go to my income. All right? 300. That is how it should appear. Now, let's see. There it is. There it is. All right. So there is my 300, my 45,000, and my 300 as well over there. Let's quickly go on now to the next aspect. Budgeted cash sales. Budgeted cash sales 23.2. And they gave us cost of sales 16,000. 23.2 and then cost of sales of 16,000. Okay, here's our table again. So if I have my budgeted cash sales, what do? I will bring it here, 23.2. That is my cash sales. But we know that sales also go into the projected income statement. So I'm going to come here, 23.2. Very important. Very important. And then my cost of sales. How much is that? 16,000. So it will come now into my projected income statement. 16,000 there. Yes. Now, let's see when it's neatly done. There it is. There is my 23. There is my 23. And then there is my 16,000. Okay. Dear learners, it is very important that you understand this. I know examiners love to test on this thing, that they can give you transactions. They want to see if you're able to tell whether this goes to the projected income statement or to the cash budget. Complete the creditors payment schedule for the budget period ending 31 July. Here is the information. All right. And then you can see here in July, there is an amount that is missing. Calculate the credit purchases for the month of July. Credit purchases for the month of July. All right. Now, if we're calculating credit purchases for the month of July, what more information were we given? Goods are sold at a markup of 80% on cost. The business maintains a fixed stock base level. Now, what this means is whatever we sell is what we buy, because we need to maintain a fixed stock base level. If we are having 5 units on hand, if we sell 3, we're having 5. If we sell 3, we'll be left with how many? 2. If we need to go back, we have to buy again 3 to go back to 5. I know most of you are thinking petty cash. Whatever we spend is what we bring back. The fixed stock base is exactly the same thing. Whatever we have sold is what we then buy. What the examiner is trying to point to you is, look at your sales to relate with the purchases. That's what they're simply trying to say here. Stock sold in a month is replaced in the same month. They're saying it again. And then the cash purchases are 65% of total purchases. So if we're looking in the month of July credit purchases, we would want to know what was sold. In the month of July, we sold goods of 936. So we're coming here to say 936,000 was the purchases in July. The sales in July. And you know by now that cost is 100%. Markup, in this case, goods are marked up at 80%. Therefore, selling price becomes 180%. So what we want, 936 multiplied by 100 over 180. How much does that give you? Please punch that in the calculator. It will give you 520,000. This is now the cost of sales. Are you following me? So this now is the cost of the goods that we sold in the month of July. And whatever we sell is replaced in that particular month. So we bought again goods of 520. Then when we bought the goods of 520, here what we want is the credit purchases. So what did they tell us? The cash purchases are 65. I have told you, if your cash purchases are 65, that means your credit purchases, what percentage are they? You're going to say 100 minus 65, that gives you 35%. So what you then want is 35%. 35 over 100. How much is that going to give you? Punch that in your calculator, you get 182,000. 182,000. That becomes your credit purchases for the month of July. Okay, so we took our 936, 100 over 180 to give you the 520. You remember we got the 520, then you take the 520, multiply by 35%, you get your 182,000. Let's quickly go, all right? Then the next one then says, in the next activity, we want to calculate, so already here we have our 182. Remember, that's what we were looking for. Creditors are paid according to the following trend. All right, so this is a creditors payment schedule, but we're going to apply the debtors collection principle, the same approach that we did earlier on. Remember? All right, so we want to do it much quicker. 40% settle in the month of purchase, 50%, then 10%. So I'm going to make this 1, this becomes 2, 3. My keyword is in the month of purchase, same month, July, okay, July, their meeting point, that becomes my 1. July, their meeting point becomes my 1. 1, 2, 3. All right, and then in simple words, I'm saying if I bought goods in July, when do I pay the 40%? I pay it in July. So that simply means I'm going to say now 182,000 multiplied by 40%. So I'm going to quickly squeeze it in here. I'm going to squeeze it here. 182,000 multiplied by 40%. And then I also multiplied by 95%. And then that should give me 69,160. 69,160. There we go. And then 2 is 50%. So I'm coming here to say 178,500 multiplied by my 50%. That should give me, how much does it give you guys? 89,250. So I come here, 89,250. And then the last one is going to be my 171,500 multiplied by 3. And 3 is 10%. That is going to give me 17,150. So I'm going to come here, 17,150. Okay. And then you can add this, and then you will get your 175,560. 175,560. Okay. Now that is how it was done. There it is, 175,560. Okay. I'm going to quickly now go to my next aspect. My next aspect, we are calculating for A. A is your rent income. Rent income is expected to increase by 9% with the effect of the 1st of July. So what does that mean? What I want, remember what I've been teaching you. I want, what is it? If you still remember, I want my 109. What do I have? I have 100. Multiply by what? 15,500. Multiply by 15.5. How much do we then get? We get an amount which is 16,895. Remember, what I wanted was my 109, and what I have is my 100. Remember, before any increase, it is 100%, and here it is now 109. How do I get 109? 100 plus the 9% increase gives you the 109. There it is, 15.5 multiplied by 1.09. It's the same as 109 over 100. which will give you 16,895. The next one, dear learners, it is an extract of the cash budget for the 3 months, and then we have loan. All right, so loan and then interest on the loan. So remember, this is under my receipts. This will be under my receipts. This will be under my receipts, and this will be under my payments. All right, receipts, I've received a loan, which is B, and under my payments, I have interest on loan of 3,150. So we want to know how much is the loan that we have received. All right, how much is the loan that we have received? So it is simple. We simply say the loan received, the loan that has been received. Remember, we did it earlier on, if you still remember, okay, when I said new loan in that time. But now I'm saying the loan that has been received. We don't know it, but the loan that has been received, I must be getting an interest rate. Let's see how much is the interest rate. It is your 13.5% per annum. And then it is payable at the end of each month. So let's see now. If I now say my loan received, I'm just going to call it loan received, my loan received multiplied by the interest rate, which is 13.5 over 100 multiplied by 1 over 12 gives me my 3,150. That is what I am dealing with. And if you remember what we did earlier on, we were able to solve this easier. Let me come here and show you then that you can simply say your 3,150 multiplied by 12, but then you divide it by your 13% rather. 13%, that becomes 0.135. If you do that, please punch that in your calculator and tell me how much do you get. Someone is saying, Mr. Simbi, I get 280,000. Someone confirm that, please. Are we all getting 280,000? Oh, yes, we are getting 280,000. So we all get 280,000. All right, here is how it should appear. And then it will eventually appear as 280,000 here. Okay, let's quickly go on now to the next aspect. The next aspect has to do with C, salaries of sales assistants. Salaries of sales assistants. It says, the business employed 5 sales assistants in the month of May on the same salary scale. Okay, so it's 5 employees on the same salary scale. Let's work with that already. So if we're having 41,000 that we are paying and it's for 5 employees, that means how much is each employee getting? 41 divided by 5, please. How much do you get? Thank you. 8,200. This is what we're paying per person. Per person. We're paying each employee 8,200. All right. 3 of them will receive an annual bonus. All right. So 3 of them are going to get a bonus, which is 75% of their earnings in July. So it's going to be 8.2 multiplied by 75%. How much is the bonus that they're going to get? They're going to get a bonus of 6,150 per person. But how many are getting the bonus? They told us 3. So you multiply that by the 3 guys who are getting the bonus. That is now going to give you an amount which is 18,450. 18,450. So let me come here now and say, so far they're getting the monthly salary, which is 41,000. They're getting a monthly salary which is 41,000. I'm putting it here, and they're going to get a bonus which is 18,450. That is the bonus that they're going to get. Let's hear the last part. A part-time assistant will be employed during July and will earn 50% of the monthly amount applicable to others. Others are getting 8,200, and this assistant will be getting 50%. That means this assistant will be getting 4,100. So we're going to come and now add the assistant's salary now, which is 4,100. Then we can have the total now. You're saying your 41,000, which is what we paid them every month, and then the bonus 18,450 plus the assistant's the part-time assistant salary. Then if you add the total, please tell me how much do you get. Thank you so much. 63,550 is what we then get. 63 rather, 550. 63,550, and then we can get our amounts like that. Let's quickly go on to the next aspect. It says cash budget for the 3 months, and then the director's fees, which is D. The director's fees, which is D. Now, let's hear the information. It says, Kyla earns director's fees of 720 for the year. The company also employed another director, Martin, for the entire year. So our director here is getting 720,000, and that is for the year. That means if you divide this by 12, how much are they getting per month? Per month, it's going to be 60,000 per month. That is what this director is getting, 60,000 per month. Then they say another director has been hired, who is Martin. He will receive an increase of 8% per annum on his director's fees from the 1st of June. Okay, so from the 1st of June, Martin is receiving an 8% increase. So that tells us in the month of June, I have 2 directors being paid here. 2 directors. Number 1 is Kayla. Number 2 is Martin. I have 2 directors. That means if I take my 98,880, I subtract the director's fees for the guy that I know already, who is Kayla, who is getting 60,000 per month. 98,880, subtract the 60,000 per month. It will tell me how much Martin is getting per month in June. So it's going to be 98,880 subtract 60,000. It's going to give me an amount which is going to be 38,880. This is what the new director, Martin, is getting in June, 38,880. But they're telling us that 38,880 has already been increased by 8%. And what we want is before the increase. Before the increase is always 100%. And we increase it by 8. So this becomes 108%. So what we want is the 100. What we have is 108. 38,880 multiplied by 100 over 108. And then how much do you then get? You should get an amount of 36,000. This is what Martin was earning in the month of May before his increase. So we can now say what Kayla is earning, which is 60,000, plus what Martin is earning before increase, which is 36,000. We add those two, they should give you an amount which is 96,000. 96,000. So if we come to D, D is 96,000. Okay. There it is. And then you end up with your 96,000. Okay? 96,000. Let's quickly go on to the next aspect, dear learners. Now, what we're going to do, we're going to start the NSC June, the year 2022. All right? So this is really fresh. So before we get into this activity, we're just going to take a 5-minute break, and then we're going to start with the NSC June 2022. See you guys back in 5 minutes. Hello, dear learners. Welcome back from the quick break we had. I hope you managed to get a glass of water. Now we're going to do our activity number 3, which is focusing on the NSE June 2022. Let's quickly move and see what is in there. It says complete the debtors collection schedule. Then number 2, calculate the amounts denoted by 1 up to 4, and then calculate the payments to creditors as well as the loan amount that will be paid. So you see the loan amount, it keeps coming back. Please be serious about this aspect. The loan amount, it keeps coming back again. Debtors collection schedule. Here's the information: sales and purchases. And then credit sales amount to 60% of total sales. And then debtors pay according to the following trend. So 40% in the month of sale, 45% in the month following, and then 12% 2 months after. Okay, and then here is our schedule given. And then here is our information. So we're going to apply again that same principle. What is our key? In the month of sale. Once it says in the month of sale, quickly come 1, 2, 3. Then go to the same month, July. Where are they meeting? They're meeting here. 1, 2, 3. All right. Then you can simply now say 609,000 multiplied by your 40% multiplied by 95%. How much then do we get? Please punch that in the calculator. I got a figure already. It's saying 231,420. So here you get 231,420. And then the next one says number 2. So I'm going to take that one, which is 598,500, 45% in the following month. So I'm getting my 45% here. Okay, that's number 2. So how much do you get? Anyone? Thank you. 269,325. 269,325. So I'm going to come here, 269,325. Okay, so don't let these ones disturb you. Okay, and then the next one. So I'm going to put my 1, 2, 3 out here. 1, 2, 3. And then the next one is going to be your 577. So I'm going to say now it is going to be my 577,500. You multiplied by your 12%, which is the 2 months after. Multiply by 12 over 100. How much do you guys get? Punch that in the calculator, please. Thank you. 69,300. 69.3. I can then add everything up, and then I end up with 570,045. 570,045. All right, let's quickly go on to the next aspect. There it is. The next aspect, calculate the amounts denoted by 1 to 4. Okay, I'm going to be slightly quicker here. Number 1, commission income. On my commission income, I am given information. Commission is at a fixed charge, a percentage of total sales. So I need to know that percentage. So I'm going to say 79,800. I'm going to divide it by 997,500. And then that is going to give me 8%. And then I'm now going to come and say my 1,015,000 multiplied by the 8%. That is how it gives me 81,200, 81.2. So that becomes the answer now for number 1, 81.2. Okay, let's quickly go on. So what I had to do here is to get the percentage, because out of these sales, we received this commission. So what percentage was used? So first I had to get the percentage, which is 8%. I had to take the commission and divide it by the sales. Then I realize that I'm using 8% commission. And then I take my sales in the month of July, multiply by the 8%, then you get you 81.2. All right. And then if I go now, I'm going to go on to the next one. Calculate the amounts denoted by 2. All right. And then on 2, what it is looking for on 2, if you see on the information, they want you to calculate the this one, 16,800. All right, let me get my information correctly here. Here we are given the debtors collection pattern, and the debtors collection pattern is 40%, 45%, and then the 12%. Now, what they want us to calculate on number 2, it is the discount. All right, here we are required to calculate the discount. We are required to calculate the discount that was allowed. So if you're to get the discount that was allowed, you have to get the information, which is the 3%, which is written off. All right, which is the 3% which is being written off. So if you are to do that, you simply take your credit sales in May, which is your 577,500. You multiply that by 3%, and then it will give you your 17,010. This question wanted you to calculate the discount that was allowed in the month of July. Discount allowed in July. The discount that was allowed in July. What is the discount allowed? The discount that was allowed in the month of July. So if discount is being allowed in the month of July, it will be allowed in the 3rd month after sales. So the 3rd month after sales. So this is the 1st month, 2nd month, 3rd month after sale. All right. So it will be allowed in July, but the sale would have happened in the month of May. Hence, we took 577,500 multiplied by the 3%, then it would be 17,010. Discount allowed in the month of July. And then let's quickly go on to the next aspect. And then we are looking for number 3, salaries and wages. Okay, the salaries and wages. An employee will receive 5% increase on the 1st of July. So if an employee will receive 5% increase in July, what we want is 100 over what he has already, which is 105 multiplied by 196,980. Therefore, it will give you 187,600. 187,600. Okay, then let's quickly go on to number 4, which says the amount of discount allowed. Okay, so we had already attended to it earlier on, and then we can simply repeat it again here. Okay, now if you look at it, there were other ways that you could have done it. But now let's quickly go on to the payments to creditors. Calculate the payments to creditors. Calculate the payments to creditors. Payments to creditors. The markup is 75% on cost and stock is replaced. Best stock is maintained. I've already explained this. And then it then says 80% of stock is bought for cash and creditors are paid in the month after the month of purchase. All right. So we are doing the payments to creditors. So if we're calculating the payments to creditors, what we are saying is you want the payments to creditors in the month of July. You want to pay in the month of July. So you have to know when did you buy the goods. Here they're telling us that creditors are paid in the 2nd month after the month of purchase. So if you purchase in May, this will be the 1st month, 2nd month, you will be paying. All right. Creditors are paid in the second month. Rather, in June, it will be the first month, and this will become the second month. Creditors are paid in the second month after the month of purchase. All right. So you're going to come here and you're going to say your 962,500. All right. And then you want to get your cost, which is 100 over 175. And then you get your 550,000. All right. And then you now say that 550,000, 80% is bought on cash. So we want the 20%, which is credit, multiply by 20 over 100. That gives you 110,000. 110,000. All right. And then creditors are paid in the second month after purchase. So whatever happened in the month of May, we sold goods of 962. The cost of sales is 550 rather. On that 550, 20% will be on credit, and it will be paid 2 months after. That will be in July, 110,000. All right, which is what we then see over here. And then calculate the loan amount. It says the interest on the loan is given. And then now this one is already an easy thing for us now. So we are simply going to get the difference between 4550 and 4025 and 4025 and 4025. And the difference is going to give you how much? Anyone? It gives you 525. And then you are now saying your 525 multiplied by 12 divided by the interest rate, which is 0.14. 0.14. And it should give you your loan of 45,000. A loan of 45,000. Okay, let's quickly go on now to another quick aspect. There it is. The business sell gas stoves. The information relates to the period of April to May. And then the CEO became aware of a competitor, Light Stores, which opened business. They sell a cheaper model stove for cash only. Peter was unable to respond to this threat. He changed his strategy in May. So in May, he changed his strategy. This included a change in the delivery service. Deliveries outsourced to speedy couriers. In April, Peter decided. Now, here are the demands. You must now explain whether Peter should be satisfied with the actual delivery cost in April or not. Explain whether Peter made a good decision in changing the delivery service provider to prime deliveries or not. Okay. Explain whether Peter should be satisfied with the actual delivery cost. Let's see. Here is the delivery cost. So we are going to compare our delivery cost with our sales. We cannot just comment on delivery cost in isolation. We have to relate our delivery cost together with our total sales. They have to relate, because we can't be having an increase in delivery cost, yet we're having a decrease in our total sales. So we want to see the relationship between our delivery cost and our sales. And then now, point number 1, Peter should not be satisfied as he budgeted to spend 425,250. So he had budgeted to spend this one, which is 15% of sales. How do you know that? If you take your 425,250, you divide it by 2,835,000. You multiply by 100 over 1, it will give you 15%. Okay, to give you 15%. This is what he had budgeted, to spend 15% of his total sales on delivery. However, the actual became 408, all right, which is now 18%. So 408, if you take your 408, 240, you divide it now by the 2,268,000. You multiply that by 100 over 1, then you will get your 18%. So he had budgeted to spend 15% of his sales on delivery, but he ended up spending 18% of his sales on delivery. Should he be satisfied? Okay. The next option that you could have said is he has underspent on delivery. All right. He has underspent on delivery expenses. This might have contributed to a 20% decline in sales. Let's try to get this 4%. How did they get this 4%? When they say he underspent on delivery, he had budgeted to spend the 425, which is this one here. So if you take your 425, 250, you say minus 408, 240, you are going to get an amount which is 17,010. All right. And then you divide that by the budgeted amount, which is your 425, 250. You multiply that by 100, you realize that there is a 4% decrease. But then he has now realized a 20% decline in sales. If you take the difference between these two amounts, the difference will be 567,000. And if you divide it by your 2,835,000, 2,835,000, you realize that there is a 20% decline. So there is a 4% that has not been spent or underspent in terms of delivery, but this has led to a 20% decline in sales. That is not a good thing. Peter had budgeted to spend 15% on sales, which should equate to an actual amount of 340. If he had spent 15% of this amount, if you take your 2,268,000 and then you get your 15%, you should have got 340,200. However, that is not what he realized. He ended up spending 48240. That means he has now spent 68,040 more than what he had budgeted. So he ended up spending quite more than his budget. Explain whether Peter made a good decision in changing the delivery service provider to Prime Deliveries or not. Okay, here's our information. All right, so in this case, we'll now say, did Peter make a good decision? So Peter would be satisfied with the change because he had budgeted to spend, this is what he had budgeted to spend, but he ended up spending 319,500. You can see that one. There is the 319,500. Okay, remember the change is happening in May. So here is his budget, which is 425,250, but he ended up realizing 319,500. Peter would be satisfied because if he spent 15% of his sales there, he would have costed him 479. If you take your 3,195,000, you get 15%, it would have given you 479,250. But he ended up only spending 319,500. So he then spent less. In other words, he saved 159,750. All right. I do hope that this part you have got it, and you need to constantly go over it over and over again. Remember, he changed his strategy in the month of May. Okay. Now, here is more information. Peter will be satisfied with the change because he budgeted to spend, but he only spent that one of his sales, which is 10% of his sales. Or Peter will be satisfied because if he spent 15% of sales, it would have costed him this much, but he has now saved 159,750. Remember, I have already explained that aspect. Okay. Apart from changing his delivery, what other two strategies did Peter implement? Here are the strategies. Strategy number one, he spent more than budgeted on advertising. All right. He had budgeted, but he ended up spending more from 120 to 192. And then he extended his credit sales from 1 million to 2,236,500. And he decreased his selling price from 3,780 to 3,550. All right. That is how he decreased. If you want to find this 3,550 that he decreased, you take your total sales, which is 3,195,000. You divide it by the number of units sold. The number of units sold. So this becomes your total sales over the units that he sold. That is how you get the 3,550. Okay, I hope this made sense. Dear learners, thank you so much for joining me today. Until next time, please take care. Goodbye.